Hello, and thanks for joining us for the second session of Day 2 at DX Connect. This session is a panel discussion featuring an impressive lineup of experts who will debate how to drive innovation in capital markets. Now, we have a number of topics to discuss, but please do submit your questions as well using the Q&A facility that you'll see on your screen. This panel is going to be moderated by Doug McKenzie of FinTech Finance. Doug, thank you, and I'll hand over to you to make introductions.
Brilliant. Well, thank you also, Steve, for my introduction. Yes, as Steve said, we are going to be talking today about how you can drive renewed innovation in capital markets. So without further ado, I'd actually like my panel to introduce themselves to get a better idea of what they've been doing over the last couple of years when it comes to capital markets. So to kick things off, Daniel, could I please get you to start?
Yeah, thanks for that. And Steve, thanks as well for the intro. Since I've been working from home, I don't think anybody's described me as an expert at anything. So it's nice to still hear that. So I've been at JP Morgan about 22 years after a failed startup in the mobile space. And, I run for quite a while. I've now run our technology and more recently our digital investment banking teams for our investment banking and corporate banking businesses here. Beside that, I spend a lot of time in EMEA engaged with the fintech community. I lead some of our diversity and tech initiatives, and I work on part of our foundation doing digital skills in the broader community.
Brilliant. Thank you very much. And Suzanne, could I also get your introduction, please?
Of course, Doug. So I'm Suzanne Chisti. I'm the CEO of FinTech Circle. And I started out working for Accenture, more than 20 years ago, implementing straight-through processing solutions. It was called at that time, in investment banking. Then I joined Morgan Stanley in London and also in Hong Kong, and then Lloyds and Deutsche Bank before launching FinTech Circle 5 years ago. And we invest in early-stage FinTech startups. And we also write books. So we've got a series of 6 books already published by Wiley, which talk about fintech innovation and digital transformation in financial services.
Absolutely brilliant. And Sotiris, could I also have your input?
Sure. Hi, everyone. Really a pleasure to be on the panel today. I've been in banking for more than 20 years, especially mainly investment banking. Have worked in a number of banks. Last one was with HSBC. I've done credit structuring, credit trading, but for the past 5 years, actually more than 5 years, focused on digital transformation, innovation, fintech partnerships, and investments. And I have to say that it has been one of the most interesting and dynamic parts of my career. Innovation never stops. Creating itself, new things are happening. You need to keep, your finger on the pulse and know what's happening in the market. So super interesting, and I think that the topic of the panel today super critical as well. So thanks, Doug.
Yeah, definitely, it's going to be a really important one. So, penultimate, can we have Michael, please?
Absolutely. Thanks, Doug, for introducing me. So I'm the CEO and founder of BSO. BSO is a global infrastructure provider that serves the financial service and the capital markets. So in a nutshell, we support all the core mission critical trading infrastructure of tier 1 banks, exchanges, trading firms when it comes to low latency connectivity, connectivity at the nearest of the matching engines, and bridging the gap between all the work we've done and all the cloud applications from the Bitcoins and cryptocurrency exchanges, and trying to help traditional finance and capital markets get the best of both worlds and get them to merge at one place if possible.
Excellent. Brilliant. And last but not least, Stefan, please.
Hi, everyone. My name is Stéphane Malray. I'm the head of market structure and innovation for the capital market activity of ING Bank. What does that mean? Market structure is mainly outside-facing roles, working with industry body, group regulators, and policymakers to prepare the future of investment banks. And the innovation work is more inward-looking to try to help the bank to innovate either through partnership with fintech companies or to create our own fintech within the bank.
Absolutely brilliant, guys. Thank you very much for those introductions. I think our audience now has a really good idea of all the experts we've got chatting, and then the various different viewpoints we're going to be getting. But to kind of kick things off again, Dan, if I could pick on you again, the first question I really want to ask to kind of get a good idea of what's happened in the past is obviously what were the core factors limiting innovation in capital markets before the virus hit?
Yeah, it's a great question. Thank you. And it's interesting because the question itself has an assumption that there were limiting factors, and it implies and I think it's a realistic implication that was kind of a technology or an innovation limitation. And actually, I think the biggest lesson from the pandemic is that our biggest limiting factor before was as it often is change, right? User willingness to accept or adopt different things. And the pandemic has forced people to rapidly adopt and learn digital skills, digital tools, both in their personal life and their working life at a rate that's kind of unprecedented. And so that change has really unlocked the ability for innovations that were kind of on the back bench or were in the kind of slow burn mode to massively accelerate ahead. We've seen at JP Morgan, we've seen, thousands of traders move to using virtual trader dealer boards. We've seen IPOs have virtual roadshows where the entire investor engagement, which historically is dinners and trips and a huge amount of like entertaining people, basically done way more efficiently. I mean, what management team post-pandemic is going to say, yes, I'm going to stop running my company for the next 3 weeks and I'm going to go on the road and go and meet all my potential investors? I mean, like, we're not going back to that. Maybe there'll be some, but it won't be the same. And so I think the limiting factors were largely people, frankly, and I think that this has been, obviously there's lots of terrible things about the pandemic, and I don't want to dismiss those. But from a tech adoption perspective, it's been like an accelerator, a massive accelerator. And I guess it's our collective jobs on people like us to figure out how to turn that into reality and make sure that it kind of gets institutionalized and that we build on that momentum.
Definitely. And Stefan, I kind of want your perspective as as the innovation guy here that can kind of say, were the factors before the COVID, the virus, were they? Was it a technological thing, or do you agree with Dan? Was it more of a kind of just mentality issue, stopping a lot of, or at least limiting the innovation within capital markets before COVID?
Yes, I think there was a lot of mentality aspect as well, and for two reasons. One, it's the ecosystem of capital market is quite small. It's probably 200,000 people around the world who work in a trading floor environment in capital market from buy side and sell side. So it's not a huge population compared to how many people use Facebook or Instagram or those kind of tools. So it's a small population. The second factor is that since the financial crisis in 2008, this industry didn't recruit too much new bloods. So you have the same people from the last 12 years trying to hold to their jobs, right? So they are resisting change because, they used to do the same thing for the last probably 20 years because, they were employed before 2008. And this is, I think, one of the big challenge. And as Dan said, we forced those people for a dramatic change in March. And most of them realize that, well, it's not that bad to do a virtual roadshow, or it's not that bad to be able to communicate with a team on video conferences or on tools to work together. So it's kind of a wake-up call for a lot of them.
Brilliant. And does anyone else have an input on the kind of? Yeah.
Yes, Doug. I just want to say, I mean, I agree with Dan in terms of innovation, and the whole process of innovating within capital markets obviously has started long before the whole COVID situation happened. I have to say though, if you look back a little bit, you will see that obviously a lot of the the innovation pipeline or how it was implemented, I don't think it was like top priority for many institutions. And I think there was this attitude of there is still time to go and do it, and there is still time to implement it. There is still time to execute our plans. So I think was happening, but it was happening, the momentum was not there 100%. It was happening in smaller steps. The whole situation with COVID has actually accelerated this. Some people thought, like, is the technology there? Now they found, yes, with COVID, yes, the technology is there. We can do things. We can actually talk to each other. We can communicate. We can do our job through a number of different tools. So technology is there. So now you can see innovation happening much faster. And I think at the same time, you see the different types of people within the banks or, the buy side. You can see that, for example, the chief digital officer role is becoming much more critical within the structure of a financial institution. I think, again, a few years ago, it was introduced slowly, but now you can see the chief digital officer is a critical person within a firm structure. Very important to have. So, it's happening. Sometimes you have key milestones of key events that expedite this whole process, and this is what happened with COVID.
Definitely. I can completely imagine. And, obviously the main focus of this talk is, how do you drive renewed innovation? But external forces are always going to play a critical role in that. And so, Tiris, if I could actually get you to speak on this again, what do you think will be the global trends? Obviously we've talked briefly about COVID, but are there any other global trends that you think will drive renewed innovation in capital markets?
Look, I think what is happening right now is that the financial firms, especially within capital markets, but overall, they see a number of opportunities, let's say, right, in what's happening within innovation. And the opportunities are also sometimes in a positive way. It's a good excuse to go and do things, right? So, for example, it's a good excuse to go and redesign and check again your processes, your operations, redesign them, do them in a better way. Using, for example, AI, using machine learning, using big data, rationalize your data, understand your data, and most importantly, deliver the data or the information that your salespeople, your traders need at the point they need it. Provide them with alerts, provide them with information about their clients, give them the information to make better decisions or to help clients have a much better experience. So this is one thing that is happening right now, and I think this is very important. At the same time, what is equally interesting is there's a number of partnerships with fintechs, right, across the buy side and the sell side. I think this again has gained momentum in the past couple of years. So financial institutions now markets opportunity to work closely with brilliant fintechs, and we have to remember that in many of these fintechs, it's actually ex-bankers that they're the founders or they're the advisors. So the experience is there. But at the same time, these people have the ideas. They can develop their ideas faster. They can deliver their ideas faster. And they need to work with a big organization or a big financial organization to have the client base or have the regulatory framework and work together to make it happen. So I think this is another opportunity. That is another force. Fintechs are becoming more mature. They're developing faster. They have people with more experience. They know how to scale up, which is actually equally important. And this is helping innovation move forward. And I think I would say one more thing, which I find very important, because people talk very often about culture. And I think culture is key. Culture is critical in a financial institution, especially within capital markets. How do you implement innovation? What does it mean to have a culture that is, open to innovation? And I think these kind of, if you want, transformation or improvement or change of culture has been happening. Again, now it's happening faster, but it's all the whole idea of making sure that as an organization, as a financial institution, we have the structure. You have the structure in place to make innovation happen, but become effective, right? Help your people, help your clients, make sure that you're open to new systems, new technologies, new ideas. These are the three things. These are the three forces that I see happening out there.
I completely, well, I certainly agree, but I would be remiss if I didn't get Suzanne. I'd love your opinion on this. Sotirios has, outlined obviously data, culture, and fintechs as being some of the global trends that are driving renewed innovation. I mean, I've got to get your opinion. What do you think?
Yeah, I mean, I do agree with all points that Sotirios mentioned, that there's so much driving change among the stakeholders, in the financial service sector happening now. And what I think also is happening is, on one side, the capital market space has been very much tech-driven already. Because when you think about, 6-7 years ago, I was working on high-frequency trading. And high-frequency trading is pure tech. The better tech, the more you win, because the faster your trades take place. So there's lots of great technology already was there. But now what we see is, of course, a new market environment as a result of COVID-19, where investors naturally got cold feet, with stock markets tumbling, lots of liquid asset classes turning illiquid, overnight sometimes, where you almost need new data points, which tell you which investments are safe, where can you get your money out when you need it. And that's something, there is huge opportunities, huge opportunities in capital markets to be more innovative. And I can just give one example, peer-to-peer lending is one great fintech subsector, which I also used to invest in. But, among peer-to-peer lenders, there are huge issues now with liquidity. So if you invested in them, you can't get your money out. And I had the same experience that, one of the top peer-to-peer lenders, where you're supposed to get your money out within 48 hours, it still takes, 3-4 months, and you're still waiting for the cash out. So investors will face this globally even more now, where previous liquid assets become illiquid. And therefore, there's a huge opportunity to make data more accessible and data more comparable, so that you can really know what's your counterparty risk, what's the risk of default, what's your liquidity risk. And even in so-called safe asset classes, so when you think about ETFs, there has been a global trend towards passive investing. Millions of people globally invest in passive funds in ETFs. But of course, we all know ETFs are not the same. There's lots of different types of ETFs. Many of them are highly leveraged. And those things are often not apparent to the investor. And I think the worst example we saw in the US market, where retail investors bought Hertz, the car company, which went bankrupt. But it increased in valuation on the stock market, incredibly, because investors didn't know it was bankrupt, and it was trading like there was no tomorrow, And so a lot of retail investors, I think, are at risk to jump now on a market which they think is still booming, but in reality, you're just ahead of the cliff. And it's a question, when do you get out in time? So I think there's huge opportunity for fintech companies to come in, because so far we have seen lots of fintech companies focus on retail banking, almost more the easier stuff, and now we need to focus on more the complicated area of finance, which is capital markets, and where there are huge opportunities ahead. So I'm very excited about it, and I think it's wonderful to have all my colleagues here, across the investment banks. And I think for fintech entrepreneurs who are experts and have got domain expertise, there will be lots of huge opportunities for them to make money and also help banks to save costs as well. So it's on both sides.
Brilliant. Well, that's absolutely incredible. And it sounds like such an exciting time to kind of be part of that industry. And I guess I should also, Michael, I'd actually like to get your opinion on this. What do you think the opportunities for digital innovation in capital markets are? Do you think they're more focused for the helping out the internal organization, helping out banks own, for instance, their own people working within them, or do you think they're better for the end user and everything?
Yeah, so if you think about it, I heard a lot of things around culture, around resistance to change and things like that inside the organizations. And being on the other side of the fence, which is basically supporting all this infrastructure to help the banks and all firms implement the change and take a leap of faith. We've seen dramatic changes since the pandemic. We work with probably every single one of the companies out there on the panel and all the other ones as well, supporting the core infrastructure to enable the capital markets to run on a daily basis. And we had tens and tens of projects when it comes to facilitate the internal teams, the internal projects, systems, tools, trading engine, order entry systems, and all the capital markets nuts and bolts in the back office move into something that's more distributed inside the cloud whenever possible, moving into non-physically based location infrastructure to support everything. And this started happening when it was completely like the last wheel of the cart, the last project ever moving forward before the pandemic. But everybody realized that, well, actually, we're very much at risk. Mentality-wise, we've been, don't break whatever works, don't touch something that's working, let's continue doing it as we did because it's been working very well for the past years. Are we taking a risk by making these changes when we have so much billions at stake over there? And most of the changes happened customer-facing so far by giving consumers or I'm going to say companies when it's B2B, either an app on a smartphone or a more in-depth web portal, web interface, or an API documentation so that they can link systems with the bank systems and the trading systems. But these things were very much customer-facing, and there was something in the middle that required a lot of human interaction and going back to the normal, a trader is going to take the order and then execute it down on the market, where now we can see that this gap in the middle, in between the internal teams and the outward-facing systems is really coming to completion and combination. And not only from the trading infrastructure, but it's also moving as much as possible, as we discussed, data into the cloud, so it's giving a lot more market analytics capabilities to the different systems and teams, and manage data and this information in a much stronger fashion than it used to be in the past.
Excellent. That's really interesting to hear, because obviously the first couple of questions, we were very much dealing with the internal organization and how innovation has changed there. But Michael, you saying that it's been very much customer focused. Suzanne, would you also agree with that?
Yes, I mean, one of our customers, for example, is a bank, who focuses also on prime brokerage. And prime brokerage is this area, dealing with hedge funds, providing services to the whole hedge fund community. And what this bank found out was that in reality, out of this 100% of customers, 70 or 80% were loss making. So you had basically 20% were your big clients who generated 80% of your returns, and the 80 small percentage, they were the tail, which made no money for the company. And the reason why they made no money for the bank was because the fixed costs of the prime brokerage unit was so high that unless you were a really large customer, you could not become profitable for the bank. And so this bank had the option of either offboarding all these hedge fund clients who are too small, or trying to digitally transform their business with fintech solutions to reduce their cost base and turn out of this 80% unprofitable clients, maybe 40% of the profitability. So you've got, 60% profitable, only 40%. Maybe not profitable yet. So there's huge opportunity, I think, in areas of the capital market space where we are not, where the P&Ls are not optimized, where there's not enough profitability coming out of existing client segments. And the reason why is because costs are too high, but you could reduce your cost base using fintech solutions. And this is something, I think, which is then easier to argue internally, because even if people are not tech-friendly, but they understand the bottom line. They say, okay, it makes sense financially. We want to make more profits. We want to cut costs. So let's go down this route. But I think I agree with what Sotiri said at the beginning, and also Stefan, that at the moment, of course, so many banks deal with so many issues at the same time. So sometimes even very good profile or high profile projects don't get done because they don't get enough face time of the top senior management. And that's another issue. It's kind of what you discuss at the board meeting, who gets enough face time, now it's online time, I guess, but what do you actually have got time to decide upon? And I think that's an issue we still face, But I think the huge opportunity is to really change, different business models within capital markets to make them long-term more efficient to run and therefore more profitable for the banks and the capital markets providers. So there's a huge drive which is just driven by numbers to get it right.
Yeah, Doug, can I add to that? Can I add to that just something, because I think that was a fantastic point by Suzanne, that things are changing, and I think you can feel the change when, for example, clients ask you, the bank, to understand, for example, what AI means to you, what machine learning means to you, what analytics means to you. How do you guys actually deal with all this? And change, you can feel change when the bankers, for example, want to have people that understand the digital and technological trends when they go and have client meetings. And this is fantastic because it seems like the market is coming together. The market is trying to understand. The market is trying to understand what are the new ideas, what is the best way and the most effective way to actually implement that. And I think there's also the opportunity there, and I've seen that a number of times, for financial institutions and their clients to sit down together and create new projects that are mutually beneficial and for the industry, right? And this is fantastic. I've seen that. I remember that almost 10 years ago when I was head of electronic trading, the same thing happened. Electronic trading, especially I'm talking about, bonds and credit, was happening back then, 10, 15 years ago, and clients wanted to know, obviously on a different level, but similar in terms of now we're coming together, understand what innovation means for capital markets. And I think that's very important.
But maybe if I can add on that, Doug, it's I agree with Sotiris and Suzanne on that. But one thing, innovation is difficult as well, right? We should not hide it from everyone in capital markets. It's hard to innovate. But one way to do it is also to look at a different horizon, because a lot of the time the clients, when they start to want to talk to you, you need to already be the expert in that domain, right? So the day they come to you to say, can you tell us how you use AI in your system to better price those bonds with us? We have to be able have like 2-3 years investment behind it to be able to do that. And I think it's those horizon of innovation that we have to be careful of, right? So in AI, if you have the data already available, you can already start to prepare and develop models and start to talk to your clients. But then if you go to distributed ledger technology, it's still a bit earlier in that process, right? There is not a lot of applications that you can deploy yet, even if you start to see the premise of that. And then if you push it even further out of digital cash, digital currencies, or if you go to quantum computing, there is nothing available yet for the capital market world, but you may need to start to think about it, because in 5 years' time, the client will call you and say, well, can you tell us about quantum computing and how it helps you to look at this amount of data and give us better services? So being a step ahead, I think it's always important for innovators within the organization, but also outside of the organization for the fintech companies to prepare what the client is going to ask in 1 year time, 2 years time, or in 5 years time.
And I would just, so I completely agree with that, Stefan. I think there's a step maybe even further, which is some client, if you think about your clients at different levels of sophistication. So some of those clients will never get to the point of knowing the question to ask. And so, you've got the clients who are going to ask you, and you need to obviously be ready. And they're probably the ones, to Sotiris's point, like who you can co-create with and who you can, really be pushing the envelope with. But you have another large chunk of your client base where actually you need to bring them along the journey. And part of how you build stickiness and, deeper relationships over time will be how you educate them and show them the opportunity, and think about the transparency. Historically, our businesses have been relatively non-transparent, and the smartest clients and the most, the real progress is going to be where, you win business not because you have a monopoly on data or you have a monopoly on, some hidden thing, but because you've created a transparent process where you make it easy for your client to see the data, think about it, and work with you to come to an outcome. And it really feels like a partnership and a solution.
Very interesting. And I mean, going slightly back to kind of what Suzanne was talking about in terms of all these innovations come to kind of maybe cut a cost slightly. We've discussed briefly AI as well, and how much that is obviously one of the core facets of AI is who can you replace effectively, and who, as a result of artificial intelligence or machine learning. But what's more interesting to probably talk about is, how far up the food chain does that go down? Could I also get your opinion on that in terms of, effectively where will the buck stop when it comes to artificial learning and artificial intelligence in capital markets?
I mean, look, it's one of those great questions. I mean, probably an artificial intelligence bot could tell you a better answer than I will. But I would kind of split the two things. Like, let's put AI to the left. I think AI is a tricky answer. Machine learning, which I think is ready now, we're using it. I'm sure many are using it. There is a lot that we can do to automate the work that is done by people today. And the real question then is what does the business do with that? Like, what is it you're trying to do? What do your clients need? What does your business need? And I think it can go a fair way up the food chain, because I think a lot of senior people still spend too much time on, asking questions, interrogating data, and pushing back on what's been created for them, maybe by the junior or maybe from a question from the client. The machine learning and the right kind of digital models, as opposed to, frankly, Excel models, could move us a long way down the curve. And then you say to those people, right, like, it's not that our business should run without any people. It's now about how do we really add value? What is it that your client really wanted you to do? And today, the lack of transparency means that 80% of the work is not delivering 80% of the value. And so if you imagine that you could free up that spare capacity, you could probably create a lot more value. So I think, to give you a non-specific answer, quite a long way up the food chain is workload that could be shifted. And the real question then is, what do you repurpose it with? And how do you make sure that you're focused on your clients' needs and your commercial opportunities?
Definitely. Stefan, Satiris, sorry, could I also get your input on that?
Yeah, I mean, I agree with what Dan said. I think you need to have a purpose, right? AI, just for the sake of AI, it doesn't mean much. I've heard a number of times, everyone is doing AI, we need to do it ourselves. It doesn't mean anything, right? For me, it's like, what are you trying to achieve? What does AI mean to you? So, for example, bots. A number of firms have bots, and bots have they're used a lot. They make a lot of sense. NLP makes a lot of sense. You want your front office people to be able to ask a question, quite quickly, get the information they need. Maybe, ask it in just English language terms or whatever, or format, and get the information they need. They need the information at that point. They need to have it. They don't need to go to a certain system, find where the system is, find what where the information is. So I think the first thing for people to understand is, before we start talking about replacing people's jobs, roles, blah blah blah, it's about what AI, what are you trying to achieve? And I think for me, the first thing that you can do, and it's not as simple, I think, to do, is to understand your data, and then based on that, rationalize your data, and then based on that, and based on the demands and the needs and the requirements from the front office or the employees in capital markets, understand how to deliver that. It could be machine learning, could be some kind of bot, it could be just simple, SQL. But you need to understand how, what, and then you will see how to do it. There are a number of options, right? Definitely AI is there, machine learning is there, and machine learning, I think, used in the past in a number of ways, but also to improve what kind of data we give to the clients. See what, for example, they trade, and then suggest, similar stuff that they would like to trade with the finances. There's a lot of kind of use cases there. But I think the first thing we need to understand is, okay, what are we trying to achieve?
And maybe just to add, Doug, to this point as well, that we have seen that I think one of the big issues using AI is that data often is in silos. So it's in silos in each division. It's not, you don't have a data lake where you've got all the data together, what you would need to access to really get meaningful results. But often you've got them in silos. And often it's even hard for internal employees to get access or bridge those data points. So these are often practical issues if we don't have access to all the data. Then when we combine internal with external data, it's another layer of complexity. And then there's a third layer, which is about the ethical use of data. There's nowadays, as we know, about facial recognition. It's not capital market specific, but it's where we have seen that there's been lots of unethical use of data not being reflective of people who are non-white, and we've seen lots of misuse, of those systems. And now they've been actually taken off the market, by Amazon and other large companies. And I think those are the things which we need to also be aware of when we use AI systems. What has been the ethical approach to developing those, and have they been explainable? Because we all don't like black boxes. We want to see and we want to understand how a decision is being made. We don't just want to be presented with the results without knowing how did you get to this point. And that's, I think, where AI needs to be made explainable without giving the IP away. That's often the issue, because often if you explain something too much, you give the IP away and the algorithmic, structures behind it away. But there must be a way of explaining it and making it transparent without, sharing the IP as such. These are, I think, issues we still have to work through in the industry.
Yeah, maybe I had on that. It's a very good point. And the what we have in capital market, it's that we are heavily regulated. And in a way, we have to be able to explain to a regulator how we provide a price to a client, how we come up to a trade, how do we book on our system, etc. And this, in a way, is a control system who make sure that this explainability of AI is there since the start. So we'll probably not have, like we saw in other industry, AI model who makes the wrong decision or hire the wrong staff or go crazy in a trade, because every step on the way we have to get compliance approval, audit approval, review with the regulator on all those algorithms that we write. But it's still a subject which is new to us, to be able to decide, for most of the bank, like us, we have a retail bank activity and an investment bank activities. And you can say, yes, if you put the data, those two sets of data together, you can do a lot more with it. But then, is it ethical to do that, right? How far can you go? And so you have to think about that at board level to be able to prepare for the future and see, how do you bring value to your customer by using the data available that you have in an ethical way? So it's a very good point. Thank you, Suzanne.
Yeah, I think that's really interesting. Sorry, Michael.
To jump on that, actually, I think it's not only specifically about AI. I think it's in general, how can we break the barriers that are forbidding us to adopt mainstream or to get to mainstream adoption of any new technology in general, to be fairly honest with you. And regulation, I think we got a pretty good example. How the crypto market managed or is managing at the moment to try and influence all the regulators, the various governments, of how they are trying to follow the best practices of the formal capital markets, traditional capital market, in terms of AML, KYC, and all that. And we're seeing the struggle that they're having with pushing regulators to understand and adopt blockchain and all that. I think we must use and look heavily at all that difficult path that they're walking through in order to get that AI and all these new technologies approved for the traditional capital market and the change and adoption of these new technologies.
Yeah, that leads perfectly onto my next question. Are these AML or KYC regulations, have they kind of caught up with the technologies that that really need to be embraced to drive renewed innovation, or is it, are these regulations like MiFID II actually stifling, for instance, some of these actual brilliant innovations because of obviously the severe ethical repercussions that could come out of it? Michael,
if I can jump on that again, I think it's interesting. So if you probably listen to any customer, again, whether it's B2B or B2C, I don't think there's a single client who's going to say, oh yeah, it's all good, KYC, AML, I love it. These 125 page documents that I have to fill up every single quarter for you guys, and there's a new regulation coming in, something new. Clearly, this is probably the one biggest demand that customers are asking, which is removing that pain for them. Whether you're Prime, you're a tier 1 bank, you're an exchange, you're anyone in the market throughout the food chain, have to comply with all these prerequisites. And any tool, any system that we can look at what was done by all these fintechs in online banking, crypto banking, and all these crypto exchanges and everything they've done, it has to be mirrored and completely copycatted and adapted for the capital markets. I know it's a lot more strenuous because it's a lot easier to have the passport scan and a picture of an individual compared to a complex fund that's structured in 7 different jurisdictions, sometimes a little grayer than the bank would like to. But I mean, I think there's a path forward on that to get there, and it's clearly again, looking at fintech and the crypto world is probably the right thing to look at.
Can I take it?
We've had 4 people there. So Suzanne, could you lead us up?
Of course. Just to add to Michael's point, I think KYC, AML is this area, of onboarding, which everybody has to go through. And, it's almost like an area which is hugely costly, but you can't really you can't distinguish yourself from your competition because you all have to do the same thing, and only you get fined if you don't do it correctly. But if we do it correctly, you're better than your competitors. There's no way of having an upside. You only have got a downside when you get it wrong. So there's a huge discussion in the industry of having a utility function, a utility platform which could be invested in by all players and then used for all players, because it doesn't almost make sense that every single bank reinvents the wheel of creating their own KYC and AML, procedures, while we all want the same thing. It's not a way of differentiating our service offerings. However, it's easier said than done. It's very hard to agree on such a utility platform, but that's one thing which has been always in discussion in the market. I'm also on the board of a fintech company which provides KYC AML solution. So there are great, fintech companies who provide, those solutions in multiple languages, easy to use. And it's interesting, whenever I join the board meetings, to understand how complicated the subject matter is. It becomes more complicated every year. With every new legislation, what needs to be now known before you can onboard your customer and your beneficial owners and the family members. It becomes more and more complex. And so it's, I think, an area which won't leave us alone, but it's an area which is almost, it's you have to invest in the area to avoid fines, but it's not an area where you can win, because the best win is not to pay any fines, basically, to do everything correctly. And it's almost, it would make sense to cooperate, I think, more in the industry as well.
It is a thankless task. And could I, Stefan, did you put your, or Dan?
Yes, I wanted, and then Dan, but I wanted to go back to the challenge of the regulation before we move to KYC and AML. It's true that regulation take times, and in Europe it's even worse because it goes through a process will take 2 to 3 years. I spend a lot of time still on MiFID 2 changes and preparing for the revision of MiFID happening next year. So we know this take time, but the real positive message that I wanted to pass is that regulators and policymakers know that they have to change as well, and they understand the challenge because they have the similar challenge of them. They receive a lot of data into their systems, and they have to understand this data as well. They have to do things like that. So they're opening, and we'll discuss after that, but now the BIS has opened innovation labs, and they are happening all over the world. We see most of the regulators now are trying to open innovation center for them to educate themselves and to prepare for the change. So I think it's a very positive statement to have that. Dan, sorry.
Dan?
Yeah, no, it's fine. Very quickly, so I'm going to agree with you and avoid the graveyard of KYC collaborations that Suzanne kind of, we all agree on the problem, I guess. We started on this innovation theme was specifically started off kind of around data. And I guess, and I'm heavily influenced by the fact I'm kind of 2/3 of the way through Shoshana Zuboff's Age of Surveillance Capitalism, which I would strongly recommend to anybody who hasn't already read it or listened to it. But what I think what it's informing me is that, whilst innovation generally is good, as we think about data, the risks around data and the fact that our regulators cannot keep up, right? Because the technology and the change happens so fast. Like, part of me doesn't feel so bad about this as I think more about on the consumer space, what's happened with our personal collective data. And so, it sounds a bit counterintuitive to say a little bit of kind of pause on the pace of innovation is not a bad thing. But I think in the case of data, where once that data is out there, it's out there, a little bit of caution is probably not the end of the world.
Interesting. It's actually refreshing to hear that. And I guess a lot of regulations have now come out, obviously GDPR being obvious one, to kind of balance that wanton abandon when it's come to our own customer data. But Stefan, you kind of brought something up at the end of that, at the end of your last point about innovation labs, and obviously in an age where collaborating with people is only going to become harder because of interacting with people becomes more difficult for health reasons. I guess, Michael, could I get your opinion? Do you think innovation labs are going to continue to be useful? Have they ever been useful? And do you think this new virtual way of doing it with innovation labs is going to help drive renewed innovation in capital markets?
I think it's just another way of naming a thing that's been existing for years and years, whether it was insourced or outsourced through a third party. Innovation is just a group of people that are joining brains and tagging along to do things together and come up with a great idea, whether an existing one and repurposing, rebranding it, optimizing it. The way of working and collaborating when it comes to technology is something that exists for 20 years. I think it's having the whole of the companies and the businesses to understand that this collaboration and this way of working needs to be implemented at every single step, every single layer, every single stage of the business is really what needs to happen to ensure that transformation and digital transformation can happen faster, better, and adoption happens. We briefly touched on something a while back when it was we were talking about change and culture change. And someone said, I don't know who it was, said, it depends on the board and what they're going to want to do and if they understand and they validate the projects. I think, again, Darwin, all that, I think it's going to happen quite naturally when there's going to be a natural replacement of executive team, management team, boards into all these organizations. People that have been living and breathing technology for 20, 30 years are going to arrive in these positions, in these roles. And quite naturally, the life cycle of the project is going to shorten itself very, very dramatically. And right turn, left turn are going to happen very, very quickly. Of course, with all the caveats we've discussed, with regulation, with being cautious with data and all whatnot. But again, innovation, there's hundreds of projects in every single banks and companies here. And I'm sure that they're going to come to fruition faster. And it's more about adoption, as I said, of this collaborative work that's going to enable these digital transformation projects to happen, and not in these labs specifically, I think.
Sure. And guys, in the sake of time, I'm sorry.
Can I say just one thing?
Of course.
Can I just say a very quick thing on that? Because I think there has been, especially about innovation labs, right? There's been this developmental process where, initially, quite a few years back, there was this trend of having innovation labs, but unfortunately, it was innovation labs without having a close relationship with the business or with the people that would, were supposed to serve. And because of that, because of this disconnect, the efficiency or the contribution wasn't there. I think this is all changing now, and whatever is happening, I don't know if it's called innovation labs or digital transformation, whatever is happening closer to the business, and the business people can see exactly how this is going to positively impact their day-to-day, and this is very important.
And Doug, can I try one sentence, one sentence to add, which is, we talk a lot about innovation, we talked a lot about senior leadership. Suzanne mentioned before, projects that have been pulled in the past about facial recognition. The best innovation and the right innovation is going to come from diverse groups, whether they're in a lab, whether they're not. Like, if you don't get the right diversity, you're probably not going to invent the right thing.
Exactly. And that actually perfectly segues onto our first audience question. And it's really, it comes from, we're actually basically looking at, because we've talked about culture being a significant barrier to change in the past. But people's resistance to change, and therefore there's a huge focus, and that maybe there should be a huge focus on people management, and that starts from hiring well. Do you think, we talked as well about it's been the same people from 2000 today. Do you think because of COVID-19 or the other global trends that we've talked about, do you think we're going to start seeing a new hiring policy in a lot of institutions that also, as you said, Dan, increases diversity, but also changes the culture from the very grassroots?
Maybe I can start on that.
To Dan, sorry. I'll get you to start.
Okay.
Oh, yeah, please. Sorry.
Yes, because I think yes and no. Probably not in capital markets, because the total headcount in capital market is still shrinking, right? And you see the headline, a lot of global banks are cutting staff drastically. So they're not going to recruit people. But what we see on the other hand, and we saw that at ING, it was more collaboration with fintech companies or early stage startups bring that external mindset, culture, and we saw that with COVID, right? In the first few weeks in March, we talked to all the fintechs. We knew to say, how do you do it? How do you work from home? How do you collaborate with your team? How do you keep them motivated? How do you hire someone that you cannot meet face to face? And this network of fintech companies that we had helped us tremendously to be able to understand how we could change rapidly and be able to run the bank. So that's why I'm not sure it's going to be through the hiring project, not in capital market, maybe other part of the banks, but at least collaboration with early stage startups.
Yeah, I'd be a little contrary and say I agree big picture. Like, I don't think there's going to be a mass influx of hiring that changes that. But the reality is, most of the firms on the street are going to continue to bring in graduates. We know that the joining juniors bring a different perspective of what they expect from an organization and from leadership. And I think leaders are going to ship up or they're going to shape out at some point. And that may not be, dramatic, widespread, but I think we will see. I think, first of all, I think it's happened already to some extent, but I think we will continue to see, the level of management's tolerance for stars who don't conform to the standards we expect. I think that level of tolerance will shrink dramatically, if it hasn't already.
And I would agree, and I think what we also need to do at all parts of the organization is to set targets for diversity, because we're talking about, that we are we don't have enough women in banking and financial services. We don't have enough women in capital markets. We don't have enough, non-white employees in capital markets and finance overall. So we need to target specifically when we hire new graduates, and then we need to make sure that they get paid the same amounts, that they get promoted at the same speed, to others. And I think that's a huge challenge, not just for HR, but should be a goal, for every manager of people to make sure that he or she promotes people fairly, who work for them, so that we have got a more fairer, diverse pyramid, in finance. And this needs to be paid for. I think targets must be linked to compensation, because otherwise what you don't measure, you don't get. So I think we need to be more serious about these diversity goals, and actually, because in order to make it happen, we need to measure it. And I think so far we've not done a very good job in doing that. So I think that's hopefully something which we can improve on, going forward.
Excellent. And kind of the next question I've got here from the audience is another forward-thinking question. And Sotiris, I'd love your perspective on this. Do you think banks already have a post-pandemic digital strategy for traders? And what do you foresee for 2021? Do you think it's still going to be very much a pandemic kind of mindset, or do you think we'll start to see this kind of green grass approach in the future?
Good question. I think if I had my crystal ball, that would be much easier to see what 2021 will bring, Doug. But I don't have it with me right now. But I think what I can say definitely is that as let's say negative and bad the whole COVID situation has been globally, I think it actually made changes happen that I don't think will go back to what it was before that. Look, overall, the trading floor is changing. It would be interesting to see across the years what types of people and how big the teams are on the trading floor, because you would see, for example, trading teams actually shrinking across the different asset classes and sales, and then having data scientists moving into the trading floor, or have other more technical people, and you would see a different kind of makeup of the trading floor. You would see more people doing, for example, electronic trading than the physical, let's say, trading that was happening before. This is definitely even because of COVID or not, this is something that will keep happening. You will see more technical people. You will see more scientists actually joining the trading floor, because they need their input, they need their contribution. Data scientists that understand AI, that could help, for example, with creating new products or actually algo trading or whatever, they're needed on the trading floor. I think this kind of process will keep happening. And that actually it links to your previous question, which was, is there hiring happening? I think hiring, there's always turnover, but you will see different skills needed. You will see different types of people joining the trading floor. And this is something that we'll see, it will keep happening.
Actually, I want to jump to what you just said, Sotiris, if you don't mind, Doug.
Please, Michael.
It's pretty funny because you're saying that, I agree with you, Sotiris. So a lot of quant physicists and dev engineers are going to come in to repopulate electronic trading teams that actually all got spun off and left the tier one banks after the 2009 crisis. And all the prop trading desks got completely spun off into third-party companies by the banks because they thought that all these talents were not needed anymore. And now actually it's repopulating these teams, but not for the same reasons, because it's no more for prop trading purposes and just high-frequency trading. It's about optimizing the whole technological execution and market data consumption chain to use FPGA and all the technologies that are actually used by HFTs, but also to be used now by the tier one banks for prime brokerage services, for hedge funds or order execution. And 10 years were lost in the process doing that, unfortunately. But yes, that's exactly what's going to happen again. I agree with you on that. Absolutely.
And agree. On that, Michael, it's like in these 10 years, the volume of data that the banks have actually accumulated has massively kind of, exponentially multiplied. Someone needs to make some sense out of this. And I think it's these kind of types of people that will be able to do that, rationalize the data, and provide the information that the front office and the capital markets people need. So this is super important.
Yeah, I agree.
I would add just... Go on.
Yes, I was thinking one thing we can predict will happen toward 2021. It's the way of working is changing, right? And what is interesting for me is the approach from different banks are quite different. So some banks were quite early sending people back to work in beginning of July, right? To say trading floor are the buzz and we want to train people, so they have to be together. And there was a few articles in the press say they are going back to work. Others are more cautious to say, well, there may be a different wave, a second wave happening, so we have to prepare our staff. Or people like to work from home, so we have to offer them more flexibility. And then there is a third thing is we don't have the space to have 100% of the team back at work. So we have to create rotation between the team. So the way we work will change, and people are trying to prepare for that. And that's why this digital trust strategy is important for them, because we are not going to go back to the same, you have a bunch of traders sitting together with the quants next to them and the data scientists next to him, and they talk to each other. They have to have different tools because they are going to rotate and be in different solution and platform. And this, I think, it's what we are going to see.
Excellent. And Dan, did you want to have a quick tag in just there, or
I was going to say the human element, right? Like, there's a social dynamic on trading floors that's like been around for a long time, and that dynamic has been broken by COVID. And so the question is, do you and as Stefan says, it's going to be a while before everybody's back in the office at 100%, a long while probably. So if that social dynamic is broken, and if we've proven we can work remotely, and we've seen what's going on with Twitter and others where they're saying, hey, you can work from home forever, and there's talent available that's not based in London or New York or Hong Kong, and I think there's going to be a bunch of trends that maybe 2021 is too soon to foresee. But in the longer term, as you think about the culture and you think about the kind of people and you think about the AI/ML kind of augmented trader, augmented salesperson, etc., I think you'll have a very different profile and potentially a very different culture and kind of dynamic around that floor. And too soon to predict the definitive outcome of that, but likely different than history is my guess, pretty significantly over time.
Brilliant. Well, to all my panelists, we've reached the end of the session, and I'd like to thank you for all your input. I mean, honestly, for a digital panel, it was so easy having everyone so talkative. It was absolutely brilliant. It's the problem that every moderator wants to have. And I think we can all agree that, COVID has been this real instigator of change. And Dan, to summarize your final points there, whether the time is 2021, it's certainly done something. So it's an exciting time to be part of the industry. So once again, to all my panelists, thank you so much for all your input. And to all our audience, thank you very much for listening in and for your brilliant questions as well. There was some really good ones at the end there. So without further ado, thank you very much for joining me. And I hope you enjoy the rest of the conference.
Thanks, Doug.
Thank you.
Thank
Bye.
you.
Thank you.
Bye.
Bye.